Hey, it's Carol and Tim.
And we have something new and exciting for you.
Everything you love about Bloomberg Radio is now in your car.
The new Bloomberg Business app, now featuring Apple CarPlay and Android Auto.
Listen to your favorite Bloomberg radio stations anytime.
Plus, every Bloomberg podcast, the latest news and more, all at the click of a button.
It's free and simple to use. Just download the Bloomberg Business app on your smartphone and connect your phone to your car.
The Bloomberg Business app, now with Apple CarPlay and Android Auto features. Download it free in the Apple App Store or on Google Play.
Presented by our sponsor, Interactive Brokers.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hey, back with the seasoned tech view to help us kind of make sense of all this whiplash is Andrew McAfee, principal research scientist at MIT. He's the author of a new book, The Geek Way, the radical mindset that drives extraordinary results. He joined us last week, but we wanted to have him back on after the news of Sam Altman happened on Friday. He's also a visiting fellow in technology and society at Google, that is Andrew McAfee, where he's working with Google on research related to the societal impacts of generative AI. And Andrew joins us on Zoom from Boston.
Andrew, great to have you back with us. Radical Mindsets, your book. You write about that in it. Sam Altman and OpenAI, do they kind of fit into that in your view?
You know, they were certainly operating like a fast-charging, high-performing geek company, and then this very strange episode started to unfold on Friday.
So how do you, from someone who has watched technology, has seen trends, seen innovation, how are you looking at this? And what's the significant thing kind of longer term, especially as we all expect generative AI to be a part of our lives forever, probably?
I absolutely expect that. And I think this is just a crystal clear case study of the importance of good old-fashioned, boring corporate governance and running a good board. This feels like a huge unforced error on the part of the OpenAI board, and I still don't quite understand it.
Yeah, I think you're not the only one who doesn't quite understand it. We don't even know why he initially was fired at this point, and we're kind of following every move of will he or won't he go back to OpenAI. It doesn't sound like even Satya Nadella at Microsoft, Carol, knows why he was fired.
Yeah, I mean, that's what's interesting. I mean, is it important in your view, Andrew, that we know every detail in terms of how this ends? Or what is ultimately the important, thing that we get out of this, or how it ends in your view?
I don't think we're ever going to know all the details, but we do know that if you have an extraordinarily popular, very effective CEO at growing a tech company, the board might not want to fire that person with no notice, really, without apparently engaging in a lot of back and forth with him, not for any fraud or misconduct or malfeasance, but because of some other kind of vague problem. If the board is going to take that fairly rash step, they probably want to alert their major investors, their biggest business partners, their employee base, and give them time to get ready for all that. They didn't appear to do any of that. And when they were frantically negotiating over the weekend to try to bring him back, that all fell apart. And it fell apart to the extent that the huge majority of the employees of the company have signaled that they will walk away. Whatever you think the board's duty is, I can't see how it includes destroying that much value, hollowing out the employee base of the company. And if the mission of the OpenAI Foundation is to advance safe AGI for humanity, I do not see how these actions support that mission at all.
Hey, business school, this is a case study of how not to do things, basically.
There are plenty of examples of that, by the way.
There is plenty. They're all that, right?
Yeah.
Often, or usually. I'm wondering, Tim was really smart in terms of our discussions that we've been having around this about what seems to be maybe at odds, and that is this debate about a need for balance of pushing generative AI, this technology, expanding, exploring it to reach its potential, but with also having an ethical line because of the potential of it to do wrong. Although I would go back to, the Cold War and missiles and the battle to have the greatest and best in terms of military, and how that could bring the end to civilization. So I'm trying to kind of figure out what is at risk if we get this wrong. Help me here.
Yeah, whatever is at risk, if your organization's mission is safe AI, and you believe apparently that a for-profit company is not the right way to accomplish that mission, then doing things that let your CEO, and again, almost all of the employees, wind up at an AI building for-profit company. They appear right now to be, a lot of them, to heading to Microsoft. That is not accomplishing the goals of your mission. I personally am not worried about the alignment risk of AI. All very powerful tools bring risks and harms with them, and they demand vigilance, and we got to be careful about it. I don't think AI is any big exception to that trend or requires us to do radically different things. We just have to be vigilant, stop the bad uses.
That is really, really surprising for me to hear from you, Andrew, because I hear from, the worst case scenario when it comes to this stuff is, okay, what if AI develops some sort of super bug or biological weapon, or in fact, in the Elon Musk school, essentially becomes sentient and more powerful than human beings? Why does that not worry you?
I read a lot of science fiction as a kid too. I think Terminator sci-fi scenarios are not great guides to policy, are not great guides to using this very powerful, very beneficial toolkit. I do think that there's a risk that AI, for example, could be used to as part of an effort to engineer bad bugs or bioweapons. Great. Why are we focusing on AI and not gene editing and not gene sequencing technologies? And why are we letting anybody apply to molecular biology and genetics doctoral programs and distributing that knowledge very freely? There are risks in the modern world. Let's not be naive about that. But singling out AI as the linchpin that's going to make everything bad happen, I just think that's wrong. I think that's a misallocation of our effort.
Okay.
And demonizing technologies that will be super beneficial to us, I think, is a lousy idea.
Well, let's move away from the superbug concern and more to the concern that it will become a sentient being that is more powerful and smarter than us, and essentially a higher order being than we are.
Override us, essentially.
Yeah. Why does that not concern you?
My friend and colleague Andrew Ng, who is himself a fantastic AI researcher, says it's theoretically possible. I love his phrasing. He said it's like worrying about overpopulation on Mars. We have so many more important things to worry about. We have to accomplish an energy transition in the 21st century. We have too high a disease burden. There are too many people in dire poverty around the world. I believe that AI might be the most powerful tool that we've ever come up with to help us solve these global planetary challenges facing humanity. And we're sitting around worried about the Terminator when there's not a shred of evidence that AI has become sentient or taken control of anything that we don't want it to. I think it's like bad policy, bad sci-fi makes bad policy.
Andrew, full transparency, you're working with Google on research related to the societal impacts of generative AI. I am curious, though, what is the balance you all at Google are pursuing when it comes to generative AI reaching its potential, but also being smart about it and careful with it?
Yeah, thanks for that, because I really want to make clear here, I am just talking about my own personal views. I am not representing Google's views on this. I actually am not on top of everything that Google believes. What I do know, because I read the statement like the rest of the public did, that Google's stance is that we need to be bold and responsible. I think we are in danger of walking away from the bold part in an overabundance of not just caution, but fear about things that we just don't have any evidence for. I want to say this again. This is my view, not necessarily Google's view.
I think, Andrew, everything that we've talked about in terms of fears, personally, again, I'm speaking personally in terms of this, and I'm almost a layperson when it comes to this stuff. The thing that most concerns me about generative AI is misinformation and the ability for bad actors to use that misinformation at scale to control outcomes.
Like happens in social media? Exactly.
Not that different than a lot of accusations that we saw fly in the wake of 2016 and 2020 elections here in the US. But if you thought a bot army of people, in Eastern Europe with social media were scary, then what about an actual bot army of generative AI that's able to, do this stuff at scale, Andrew?
Now, that's a harm that we should be worrying about, because I got fooled by that picture, that alleged photo of the Pope in the puffy white coat.
He looked good,
I thought the Pope was wearing a puffy white coat.
It looked
I
cool.
really did. I got taken in by a photorealistic deepfake. These are actual challenges. And like you say, bad actors are going to weaponize generative AI to do all kinds of harm, or try to do all kinds of harm. This is a real risk. It's a real harm. I have faith in our ability to deal with the harms that technology brings us. I think we can find ways to have trusted sources that will verify whether a thing is a deep fake or not. All of us have the news sources that we run to when we see something that might be true or might not be true. We can strengthen those kinds of institutions and those kinds of responses. We can also educate people to be more discerning consumers of the news. These are all things that we can and should do. Sitting around worrying about the Terminator instead is, as I said, just a huge misallocation of our attention.
I think the Terminator coming to life is more realistic than educating the large populace with news judgment, but I'm a cynical person, I guess.
That's a little cynical.
Yeah, I know.
All right, everybody. What's interesting too, though, is, you talk about, you have faith to deal with the harms that this technology maybe will ultimately bring us. Should there, though, be some guardrails in place? Shame me once, shame, or fool me once, shame on you. Fool me twice, shame on, you know what I mean.
That.
You know what I mean.
Okay, George W. Bush.
Where's ChatGPT?
We don't get fooled again, right?
But I guess my point is, whether it's social media, whether it's crypto, there's a lot of things out there that's like, oh, I guess we should have been doing this. Yeah. Is there something we should have in place at this point when it comes to generative AI?
I think what we should have in place is a very agile system for becoming aware of the harms and dealing with the harms as they crop up. For example, after smartphones were out for a while, we learned that a bunch of losers were using them to take pictures up the skirts of women, as they commuted to work on the subway.
Right.
We didn't outlaw the smartphone. We didn't make smartphone makers apply for a license to use a camera. We didn't make all of us apply for a license to have a camera-equipped smartphone. Around the states anyway, lots of legislatures acted really quickly to make that particular use of the phone illegal. Fast response to the harms that come up is my preferred approach for dealing with these. I don't trust me or you or anybody else to sit around right here and correctly anticipate all of the things that will happen and all of the effective ways to head that off. I just don't.
All right, we're going to leave it on that note. I'm so glad we got some more time with you. Andrew McAfee, Principal Research Scientist at MIT, author of a new book, The Geek Way, The Radical Mindset That Drives Extraordinary Results. Also, the Visiting Fellow in Technology and Society over at Google, joining us on Zoom from Boston. Andrew, thank you so much. Be well.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
It's the most wonderful time of the year. With the kids jingle.
All right, everybody. So there are a lot of retail earnings that have crossed the Bloomberg terminal, but we do want to go to there, and those were earlier in the session, but we do want to mention, we just talked about Nordstrom, and really what is kind of freaking investors out here in the aftermarket is the company's outlook. Seeing fiscal year adjusted EPS of $1.90 to $2.10. They had seen $1.80 to $2.20, and Tim, we've been covering it, but the stock, let me just pull it up. It is down. Well, now it's just actually a little higher, up about 0.9% in the aftermarket, but it's bouncing around. It was selling off earlier, but we had a lot of retail earlier today as well.
Yeah, Lowe's shares took a hit after the company cut its annual forecast. Best Buy slumped after reporting third quarter comp sales that trailed the average analyst estimate. Kohl's tanked earlier today after the company reported third quarter comp sales. Dick's Sporting Goods, it was kind of a mixed bag, although I guess you could say kind of Dick's was the outlier here. It raised its profit forecast. When I mentioned that story that richer Americans are starting to pull back on their spending, there's a lot of questions and a lot to get to when it comes to the strength of the American consumer.
I think that's a really important one because we talk about trading down. Lou Gardner has a lot to say about the retail sector. She's Associate Partner for Consumer Packaged Goods, Retail and Logistics at Infosys Consulting. She joins us on Zoom from Naples, Florida. Mary Lou, how's the retail group doing? And I know it's not oranges to orange. Not everybody has the same story, but how would you sum up the retail sector and how is the U.S. consumer doing?
Well, the U.S. consumer is still feeling that tremendous pressure from three areas, right? The rising interest rates, the credit card debt has gone through the roof, and the savings that they had coming out of the pandemic has, really decreased or deflated. And so they're getting more anxious every day about what to spend, where to spend it, and their decisions in terms of discretionary spending are getting more regimented every single day.
So does any of
So
this surprise you, what we heard from these companies, not just in the last 10 minutes, but in the last 24 hours, Dick's sort of excluded?
No, I mean, I think we had some leading indicators with Target and Walmart last week as well, right? They saw that in October, spending really started to slow down in the back half, which gets everyone nervous for the holiday selling season, where, retail, that's their bread and butter. And right now, the forecast for the retail selling season is that it's going to be the slowest in the slowest growth in the past 5 years, only expected to be up 3 to 4%. So I think what you're starting to see is they're looking forward for the next 3 months based off of even what they've seen in October and said, this could be a little bit of a rough year for us. We're not going to get the profits we thought. And we're not going to see the sales, or they're going to be spread out over time.
What does holiday hiring trends tell us about the holiday season?
Well, I mean, the NRF also has said that they expect that trend to be down about 40%. And what we've seen so
Wait,
far
you
is
said 40%?
40% from 2021, which was that recent high. So Walmart's a perfect example. They have not hired any seasonal hires.
Wow.
So if you
Well, I
look
thought I
at-
remember seeing Amazon hiring tens of thousands, but that's typically what it does, right?
That's what it typically does. When it's mostly, we haven't heard from Amazon that they haven't been hiring. Macy's cut down their hiring significantly. Across the board, there are just less. There's, 345,000 to 445,000 is what they're predicting, which is 40% down from 2021.
Mary Lou,
Which is just
so you mentioned it to the peak of 2021. How does this compare to 2019? Because I'm trying to figure out how much is just getting back to normal, how much is there's something going on, consumers are feeling pressured, which certainly seems to be the case at this point because it feels like there's more and more evidence of that. But give me an idea of how what we are seeing and how it compares to 2019 pre-pandemic.
Yeah, I don't have the exact 2019 numbers, but this slowdown is so significant in the hiring, and there's the combination of the shift to e-commerce. So there's probably maybe more hiring there, less right in the retail brick and mortar. With using Amazon as one of the examples, but it's concerning in a couple of ways. That if you think about how retailers have spread like kind of the importance of the holiday season and they keep pulling it forward and pulling it forward, I think the consumers got some fatigue and along with the pressures. So if retailers are not hiring, which is what we've seen, and I don't know the exact numbers to 2019, could get them for you another time, but
That's okay.
it would show to me that that drop of 30 up to 40% is nothing we've ever seen before. It would shift by 10 to 15% over the years, depending on what was happening in the economy. But we have that, like I said, that triangulation of that pressure on the consumer. And I know a lot of people that have said that they're pulling back as well, and people who can well afford to. There's so much economic uncertainty, as we all know, and it just makes people nervous.
I got to ask you, and I know you're not a markets person. I know you cover retail, but there does seem to be this disconnect from what we're seeing in the equity and the bond markets in terms of the way that people are thinking where we are in the economy and where the Fed is. Based on what you know and what you see in your work as a consultant who covers retail, would you say that we're in a recession or a recession is on the horizon?
And maybe like a consumer spending recession.
Well, consumers power this economy.
Correct, but the consumers are on the brink of. I think the consumer spending is on the brink of a recession, based off of all of the concerns and all the noise we hear about the fact that debt has gone up significantly and people have lost their savings, they have to stop spending at some point.
Right. We talked about yesterday, people tapping into their 401ks.
And today, wealthier people, trading down essentially.
So what does this mean in terms of retail names? More fallout, more consolidation? I don't know. How do you think about that?
Yeah, I definitely think we're going to see some fallout. I mean, I was listening to you earlier about the whole Nordstrom, announcement, and that's been on the brink of disaster for a while now. And when you start to see, the prestige market is definitely collapsed and has been challenged. So if that market collapses, and then in between we've had the consolidation and we've had kind of the Amazon takeover happening, we're going to see continue to see a shift in what the retail landscape looks like and how it's defined, and less about brick and mortar, more about e-commerce. But what it looks like today and what it looks like 3 years from now, I think is going to be very, very different, similar to what we saw coming out of the pandemic.
That's so. I mean, I'm really hearing a lot of concern from you. What are you telling clients in order to do? What are you telling clients to do in order to prepare for where you see the consumer going?
And so getting really, really smart about understanding your consumer preferences, your consumer shopping behaviors. What are they responding to right now? Leveraging more of our, AI and ML to really understand and be targeted in your assortment, be very discreet and not carry too much inventory. I mean, you've seen over the years, retailers have gotten themselves into a lot of trouble around the inventory levels. And there's been some whispers that they're concerned about that again this year, potentially. That if the spending doesn't happen as people had hoped it was going to happen, they'll be hung with inventory and we'll have heavy discounts and markdowns again. So another cyclical problem.
Interesting.
So we're trying to tell people to be really smart about that and be targeted and be thinking about it now,
right?
Even before you get to the end of the season and be hung with all that inventory.
Interesting. So great to talk with you. So timely. Mary Lou Gardner, Associate Partner for Consumer Packaged Goods, Retail and Logistics over at Infosys Consulting, joining us on Zoom.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, folks. Tim and I have just been pouring over this Nvidia press release. Stock still down a little bit, about 0.9% in the aftermarket, but it was taking a little bit of a bigger hit earlier. So let's get to it, because back with us is Dan Morgan. So glad to have him with us. Follows the tech sector and obviously Nvidia. He's Senior Portfolio Manager at Synovus Trust. He's on the phone from Atlanta. Dan, help us out here, because it looks like it's a big beat on a lot of levels.
I mean, expectations were really high.
Okay, but they met them and then some. Stock's still down about 0.9%, 1% off the lows in the aftermarket. Tell us about the quarter that was and the outlook.
Hi, Carol. Hi, Tim. If you look at these numbers, at least the headline numbers, it's hard to find a flaw, right? Because they beat on revenue for the third quarter, $18.12 billion versus $16.18, and then their estimate going into the fourth quarter was $20 billion plus or minus 2%. Consensus was around $17.81 billion. Huge beat in data center, which is where the AI chips are housed, coming in at $14.5 billion versus about $12.8 billion. That's a 41% increase year over year, and earnings were a beat. So, to be honest with you guys, this stock traded up in anticipation of blowout numbers, because I don't want to say anything leaked out, but there were a lot of reports saying that channel checks were showing that they were doing very well in terms of selling their AI chips. And I just think that it's, again, Carol and Tim, one of those situations where it's like, buy on the rumor, sell on the news, because I can't see any flaws in this report.
What about the China element here? One of the headlines that we have on the Bloomberg terminal, Nvidia is saying that it expects sales to China to decline significantly in the fourth quarter, but the decline will be offset by growth in other regions. How should investors take that information?
Well, you're right, Tim. China is probably going to be the major focus on this upcoming conference call. Everyone's going to be asking about their China business. We know that Nvidia generates about 20 to 25% of their sales from China. There are two core chips that they sell in AI, which is the H100 and the A100, have Chinese equivalent, H800 and A800. We also know they have a slew of new chips coming out that are going to be focused just on the Chinese market that are supposed to meet all these new restrictions. So
yeah,
I think that quote, Tim, because that's kind of in the back of everybody's mind in terms of a worry surrounding NVIDIA, and the fact that they mentioned it on the initial report, I think raises the big red flag, and that could be why Tim and Carol were seeing the stock kind of sell off a little bit on this news.
Yeah, you bring up a good point about where the revenue comes from. If you have a Bloomberg terminal, all you got to do is type in FAGO on the terminal, and you go over to segments by geography, and you can see that foreign revenue accounts for about 69.3% of the company's total revenue in 2023. Carol, 25.9% of that came from Taiwan. A whopping, 21.4% of that came from China.
But what's interesting is, and I want to go back to the outlook. They talked about revenue in the current period, about $20 billion, I think, give or take. What was it, 2%?
Yeah, 2%.
Upside downside. Our Ian King writing that the estimate that some were projecting was as much as $21 billion. Was it, like you said, just the case of that people just wanted more, expected more?
You know, Carol, NVIDIA has turned into the poster child for whisper numbers, right? Remember the whisper numbers?
Remember we used to talk about that? Yeah.
Yeah, we used to talk. There's an estimate, and then there's the whisper number. So we're back to the whisper numbers, it sounds like, with NVIDIA. So, yeah, I think you're right, even though it's a huge beat, right? Because the consensus estimate was $17.81 billion. Again, they keep putting these metrics to go higher and higher and higher, and it just gets to the point where, you know, you just can't please, right?
To be fair, the stock's now up about 0.8% in the aftermarket. So it's like somewhere somebody like slapped somebody on the face and said, "Did you look at the numbers?"
But maybe, and look, it's tough to look at what happens, you know, when earnings come out before the call and before the markets open in the morning. So we take the moves. It's early. We take the moves with a grain of salt. But maybe, Carol, you know, maybe there was a block trade, or maybe people saw this as an opportunity just off of, you know, all-time highs to sell stock. I don't know. That's
fair. Having said that, Dan, I do wonder, you know, when I think about NVIDIA, I'm like, well, who's going to take share from NVIDIA? Who will?
Yeah, and that's an interesting question, because if you look at the data center space right now, their total revenues that they generate is about twice of the combined competitors, right? Which is Intel, AMD, Marvel. But they do have companies like AMD, like Marvel, that are coming out with new chips that are going to be introduced in that space. Intel has Falcon Shores. They also have their Habana, which is supposed to be coming out here soon. So I think that may be another thing that's on a lot of people's minds, which is, you know, right now NVIDIA is 70-80%, as you know, of the AI chip market. Really, these other companies have been a little bit slower to come out with their competing chips, but they are coming down the road, right? AMD has the MI300. You've got Marvel Technologies, which has already introduced their PM4 DSP. So will they be able to be still the king of the mountain, right? Or are they going to have to share a little bit of market share with some of these other companies? And there are a slew of chips that are going to be coming out here in the next 6 to 24 months from some of these competitors that I mentioned. And it'll be interesting to see if maybe buyers want to start using an AMD chip.
Okay, I got to ask you this, because everything this week comes back to Sam Altman. But I mentioned this earlier, Dan, and amid the drama over the reporting of Sam Altman's ouster at OpenAI last week and the ongoing discussions that our team is reporting that he's having with the board of OpenAI to return, we learned that Sam Altman had some outside projects. He was trying to raise money for a chip competitor to take on Nvidia. Could a startup actually emerge to take on Nvidia?
You know, Tim, I think it would just be really tough because, you know, Carol and I, we always followed NVIDIA. We thought it was a big gaming chip, and they had all the cash cow and money that was coming in from that. They used that to leverage it to go into the AI space. So it would be really hard to take on the likes of some of these companies that we mentioned just because of the sheer size and the amount of cash they have. I don't think they could raise enough money. So I'm not as worried about a startup like the one that you mentioned. I'm more thinking in terms of some of the older names that have these new chips coming out.
Okay, so just got about a minute and a half left. what would you ask on the conference call? You mentioned about China coming up, but what is front of mind or front, for you in terms of the Nvidia story, Dan?
Well, the China issue, which we mentioned, and also how does Nvidia continue to defy gravity in regards to the data center space, right? We know that Acer, we look at all these competing IaaS programs in terms of AWS and GCP. We're seeing growth rates slowing down, and yet we see continued increased spending towards Nvidia, the AI space, and the data center. So will they eventually fall suit to this slowdown? So obviously getting a little bit more information about how they're seeing the data center space and why they're growing when everyone else is deaccelerating.
Would you buy or sell on this news today? Just got about 20 seconds left here.
Yeah, Carol, NVIDIA's been a long-time stock on our buy list. Mm-hmm. Obviously, for clients that have the proper investment objective and risk tolerance and they don't own it, it would be something that we look at. The stock's not crazy. It's 45 times fiscal year 2024 earnings, and we're already going into the fourth quarter. So everybody hangs their hat on that trailing multiple, but it's not that overpriced if you look at the forward growth rate expectations in terms of earnings.
Only up 240% this year, Carol.
Yeah, stock's still down about 1%, but it is like you look at the dynamic growth that we continue to see at this company. Dan Morgan, have a great evening and a great holiday. Dan Morgan over at Synovus Trust.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
It is time now for another edition of Bloomberg Plugged In. It's your weekly look at EVs. And all is not well when it comes to the world of EVs. Earlier today, Carol, we got the news that Ford is reducing capacity and hiring plans at a battery plant that it's building in Michigan because it sees weaker demand for EVs. Remember, sales of its signature F-150 Lightning plug-in pickup fell 46% in the third quarter.
All right, so let's see what Brendan Jones has to say about that. He is president and CEO at Blink Charging. It's a $241 million market cap company, trades on the NASDAQ. It designs, makes, owns, and operates EV charging stations. And the company says it's contracted, sold, or deployed nearly 85,000 charging ports around the world. He joins us on Zoom from on the phone from Miami Beach, Florida. Hey, Brendan, great to have you here with us. Stock took a hit today, down about 7%. You're down about 67% year to date. Before we talk about the business, because you guys had a good quarter, what are you hearing from your investor relations teams about what's going on? Why is the share price seeing so much pressure to the downside?
So, I think the whole industry, if we look at the EV charging industry and then more broadly at the EV industry in general, we've been under a lot of pressure for the past year. There's a marked difference from the frothy years that we saw about 18 months plus ago to where we are now. And all the EV infrastructure companies seem to be suppressed at a much lower valuation. And if you listen to the advisors, what everybody's saying is the same thing. It's great to be a growth company, but we're focusing on profitability now. So you got to continue to grow, and you've got to give us a definitive path towards profitability. And that's what we've done on Blink. We give them the timeline and a target, and we intend to get there by December of 2024.
Well, you're not going to grow if they don't grow the number of EVs that are out there significantly. And I think that's an important thing that I want to get from you, Brendan, is what's going on with EVs? I thought EVs were the future, and now on some dealership lots, they can't get rid of these things fast enough.
Yeah, there's some micro issues in the industry, but when we look at aggregate sales both globally in the United States, they're up year over year and continue to be up. 8% was the sales pen rate on a U.S. basis. In California, it was 22%. In one of the earlier months of the quarter, it was actually at 25 in California. California has the 2035 mandate of nothing but internal of EVs can be sold in the state, and several other states have adopted that same thing. So I think we're certainly seeing a little bit of a downplay in the sales volume, but over time, based on regulation and OEM commitment, we're going to see an uptick. And when you look at the broader numbers, we're looking at a 2030 number of just 35% EV penetration rate, and that would necessitate a need for 30 million chargers within the United States alone. So while there's some blips right now, we're still encouraged by the overall economic positiveness of the whole space, especially the states that are mandating EVs. and zero sales of internal combustion engines.
Brendan, unfortunately, we only have about 45, 50 seconds left here. How do you compete, though, with the likes of Tesla that continues to open up its charging network and capabilities to other automakers?
Yeah, well, Tesla is primarily a DC fast charger owner and operated model. Blink is a full-on vertically integrated sales model where we sell chargers. The majority of the chargers we sell are L2 chargers, and we own and operate them as well. So Tesla is primarily highway-based charging. We provide charging in the metro. We provide charging in the home. We provide charging at multifamily dwellings. And we do it when we install and own or operate at far less the cost of the expensive DC fast charging. So it's a completely different business model, but we'll also be deploying chargers that can charge Teslas. And if we look more broadly at what our number one customer is who plugs in the Blink, it's Tesla drivers.
Listen, promise to come back soon when we have a little bit more time. We would love to continue this conversation. Brendan Jones is the president and CEO at Blink Charging, joining us on the phone from Miami Beach, Florida. We continue to watch Nvidia in the aftermarket, now just down about 0.9%. Looking for some headlines coming off of that analyst call. We'll continue to monitor. You are listening and watching Bloomberg Businessweek right here on Bloomberg Radio.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.